Mining is taking a toll pretty much everywhere due to the decreased price of Bitcoin, and it is starting to cause basically liquidation of Bitcoin from the miners. It does appear, as far as I can tell, that that is also getting put into whale wallets, unfortunately. Usually the Bitcoin mining wallets are the whale wallets during the bull run, and then during the bear market you have the accumulation of outside of miners. But coming from Benzinga Crypto, Bitcoin miners sold $6.3 billion worth of tokens in May to cover costs. So what happened? The crypto bear market has forced a number of miners into selling their coins, according to a report from Bloomberg on Sunday. Coinmetrics data compiled by Compass Mining shows that miners sent 195,663 coins to exchanges in May. These coins would have been worth a cumulative $6.3 billion according to Bloomberg's estimates. Miners may begin to sell hodled Bitcoin into the open market, said Compass Mining in a research note. At the very least, they are feeling the pain after the last major dip in price. Couple this with the downwards difficulty adjustment indicating miners powering off, and it seems miners may be hitting a wall in profitability. Among those miners contemplating selling Bitcoin last month were larger crypto mining firms like Riot Blockchain, Core Scientific, and Marathon Digital Holdings. In an earnings call last month, Core Scientific confirmed that it was lowering its outlook for 2022 and plans to sell some of its 10,000 self-mined Bitcoin. Riot sold nearly half of the Bitcoin mined in April, while Marathon said it was considering selling some Bitcoin holdings to raise $500 million that it requires for growth objectives. So, what do we know so far as the bear market and impacting miners is that they will start to liquidate their Bitcoin, and this is a traditional sign of course, a bear market or a crypto winter. It's nothing surprising if you've been in cryptocurrency for multiple cycles. This is pretty common stuff. Part of the reason he gets forced to do this is because capital starts to dry up, and that is multiple forms of capital, right? Whether they are getting investment through selling stock shares, which obviously have gone down, or they're getting investment through loans by requesting loans from other people outside of cryptocurrency with traditional markets, or whether they are getting loans through basically using their cryptocurrency as collateral. All of that capital is getting reduced. So the only way for mining farms to continue to operate is to sell the Bitcoin that they have mined so that they can cover the costs or continue to meet their growth goals. And as we've talked about before, the biggest way to kind of offset the bear market is to outgrow it. And it gets really tricky because you have this capital problem of nobody wanting to invest capital into cryptocurrency, but you needing at the same time the most amount of capital to continue to grow with the market so that your margins get better. Basically, the more revenue, the less the costs will affect you, right? So it ends up being a very tricky position to be in. And when we are talking about my farm, which I highly recommend taking a look at, it's a much smaller scale, but I can see the same problems where what I think may have been the best thing to do initially would have been to early on during the all-time highs is take out a cash position to be prepared better for growth during the bear market. And that's kind of how I see it from my perspective. We'll be talking more, of course, every month as I go over the budget and what my plans are on how to basically prepare better for the next bull run. I hope you enjoyed this clip from the Crypto Mining Morning Show every Monday through Friday, 7:45 a.m. Pacific and 10:45 a.m. Eastern Time. You can check out more clips here, or if you're interested in checking out the entire live show, you can check that out down here. Thanks for watching, and I'll see you next Tuesday.